I don't even think people know that the class is not filled up yet because I can see people are requesting for the YouTube link. But no problem. I will share it now. So, good evening once again. All welcome to tonight's section. Sorry, I'm trying to rounding up some settings so that we won't be disrupted during the process of the class. So, like I said, we'll be looking at IS 16, property, plants, and equipment. So, we start with the definition of the standard. These are tangible assets that are held for administrative purpose, production of goods or rendering of services or rental to others that are expected to be used for more than one accounting period. So basically, when we talk about IS 16, these are the property, plant, and equipment, the tangible assets of the organization that are mainly used for administrative purpose. So what do we mean by administrative purpose? It means that these are the machines, the equipment, the property that we use in the day-to-day running of the business, in ensuring the going concern of the business is being maintained. They are majorly being used for administrative purpose. However, when we talk about the asset that is being held for capital appreciation or rental to others, so this, sorry, property held for rental purpose is an investment property. So that is what I want us to understand here. If you can remember when we are defining IS 40 investment property, these are the property that have been held for capital appreciation and not being used for administrative purpose, not like this IS 16. So they have been held purposely for capital appreciation or for renter to generate a rental income. But the asset that is being used for administrative purpose, that is being used in the production of goods or rendering of services, that is being used in the day-to-day running of an organization activities. These are what we call IS 16, property, plant, and equipment. So classification of property, that is, we have land, we have building, and we have boats. So it should be noted that property can be classified into different assets as follows, depending on the reporting entity purpose for holding or acquiring the property. So we have inventory. So if the property is held or acquired for sales in an ordinary course of business, then it become an inventory to the organization. So if you can remember in our IS2, so inventory, these are the property that is being held or acquired for sales in the ordinary course of business. So for all these property that meet up this particular definition that are being purposely or acquire for the purpose of resale or for the purpose of transaction in the ordinary course of business. So these are categorized as our inventory. So example of these are real estate company that are into sales of land and property. So to them, land, property, building, or even any of these three, they become their own inventory because that is what they transact in the ordinary course of business. What they transact is inventory, is those buildings, the land. To them, those particular buildings are not being held for administrative purpose. That is what they transact on the normal day transactions. So we have PPE, these are the one that is being held for administrative purpose. We also have investment property. So these are the property held or acquired for rental or to others or capital appreciation. We also have current asset held for sales, IFRS 5. I think we have discussed that already. So these are the property of the entity that they have decided to let go of, that their value will only be recouped from outright sales rather than continue usage in the organization. So these are the likely categorization or classification of property. You have property as an inventory. Under this, it will be treated in line with our ES2, and it's going to be a current asset. It's going to be a current asset because that will be what they transact on the day-to-day activities. So we have some industry line that what they transact also fall under the category of property, plant, and equipment. And we give an example of real estate company. We have PPE, which are what we use for administrative purpose. We have investment property, which are the property, land, or building, or land and building that have been held for rental to others or for capital appreciation. So, what are the examples of property, plant, and equipment? What we just discussed is the classification. So, example of property, plant, and equipment under IS 16, we have land held for administrative purpose. Land held for administrative purpose. Land and building held for production of goods or rendering of services. We have machinery, we have motor vehicle, we have all these equipment. So these are the examples of property, plant, and equipment. So we have the recognition criteria. What are the recognition criteria that must be met before a particular asset can be called IS 16? A property, plant, and equipment. Number one of these criteria is the asset must be tangible in nature. It must be something tangible that we can see in a physical substance. For we can say, okay, this is IS 16. It must be probable that future economic benefits will flow into the entity. And the last one is the cost of the asset must be reliably measured. Before we can say, okay, this particular asset has met up the criteria for us to categorize this as our IS 16. All these conditions must be met. It must be tangible. There must be future economic benefit that will flow in as a result of past events. The cost of the asset must be reliably measured. And also, the company must have control over the assets. The company must have control over the assets. Either control gained through lease or through bring the actual owner of the property. But the company must have control over the assets. Measurement of PPE. Let me enlarge the screen a bit so that those watching us from YouTube, so in case we have found to see it. Please, can you confirm if you can see my screen properly? Please, let's indicate with signs. All right, thank you very much. Thank you. I just want to be sure so that it won't be like I'm just talking. I think I think you have discussed IAS 40. Oh, please, if you start the class with us, can you confirm if you have discussed IAS 40, please? This diet, because I can remember. I think we have discussed it for those that start the class with us. I think we have discussed it. Are you sure? Anyway, no problem. Let's continue. So after discussing the criteria, we also look at the cost should be recognized as the actual cost of property, plants, and equipment held for administrative purpose in line with IAS 16. What are the costs that are met up with the capitalization? The capitalization threshold. So we have two forms of IAS 16. We have IAS 16 acquired, and we have those ones that we constructed by ourselves. So these are the major costs that we are allowed to capitalize as the initial cost of the asset. If we are talking about those ones that we acquire, we have the cost purchase, which is the cost price, the non-refundable taxes, the professional fees. So the professional fees are like the legal fees, agreements and commissions, all those legal fees that we actually incur them as a result of us trying to acquire the particular asset. Invariably, if we are not going to acquire that particular asset, there is no reason for us to incur that particular cost. So if you are incurring that cost only reasonably, exclusively, and necessarily for the purpose of that particular asset, then we can capitalize such kind of costs. We have installation costs. We have the transport cost, which is the cost incurred by the organization in moving the asset from the place of purchase to the place of usage. We also have installation cost. We also have dismantling cost and any other cost directly attributable. Let's take note of that. Directly attributable to the cost of the asset. So that is it for acquired assets. And for self-constructed assets, we have the cost price of the material. We have the cost of direct labor, which is the labor being used to build the particular asset, maybe the labor we use to build our building. We have direct cost overhead. We have the cost of purchase. We have the non-refundable taxes. We have the borrowing cost. Borrowing cost, a qualifying asset. You can remember, yes, 23, which is the first class. We have the transport cost. We have the installation cost, and we have the dismantling cost. These are the major costs that we can, capitalize when we are looking at the initial cost of our property, plant, and equipment held for administrative purpose. So we also have the subsequent measurement. What we show you at the top is the initial measurement. At the initial stage, the asset will be measured at the cost. So what made up the cost is what we just discussed now. So initial measurements, IAS still require that item of PPE can be subsequently measured either as cost model or evaluation model. So under the cost model, the carrying value is the historical cost, which is the total cost that we incur at the initial stage, less accumulated depreciation and accumulated impairment. So if we are using the cost model for a subsequent recognition, we are going to arrive at our cost model for the value of that asset as at the reporting date by considering the initial cost, less accumulated depreciation, less accumulated impairment, even. And if we decide that we don't want to use the cost model, we can also use the revaluation model. Under the revaluation model, the carrying value is the value amount being fair value as at the date of revaluation, less subsequent accumulated depreciation and less subsequent accumulated impairment loss. So we need to know that revaluation model could either result in upward revaluation or downward revaluation. I think we have looked at the revaluation when we are treating IFRS 13. So at initial stage, IAS 16 is to be recognized, is to be measured at the cost. After the initial stage, subsequent recognition can either be cost model or evaluation model. So if you are using the cost model, you are going to use the cost price, which is the initial cost incurred, then less historical, less accumulated depreciation, less accumulated impairment loss. 1 minute, please. Sorry, can you confirm you can hear me now? All right, thank you. So after the initial measurement, the subsequent measurement can either be the cost or the evaluation model. So I've discussed the cost model to be the cost minus accumulated depreciation, accumulated impairment. So if we are not using the cost model, then we can use the evaluation model. So the evaluation model will be the fair value as at the date of evaluation, less subsequent accumulated depreciation, and less subsequent accumulated impairment loss. So we need to know that if you are using the evaluation model, we can either have evaluation surplus, which is the same thing as upward evaluation, or evaluation deficit, which is the same thing as downward evaluation. So for upward evaluation, these arise whenever the value amount exceeds the carrying value immediately before evaluation. So that means the carrying value of the asset before evaluation is less than the value of the asset after evaluation. That means that we are the value we have before we carry out the evaluation exercise is lesser than the value we have after the evaluation exercise. That means the carrying value is less than the revalued amount. So that means we have upward evaluation, we have surplus evaluation. Either ways, that it means that the value of the asset has been appreciated over time. So the value of the asset has been increased from what we carried, the carrying value we have on it before, compared to the recent value or the current value of the asset. So if we are using the evaluation model, we can have a cases of evaluation surplus. While there is also a downward evaluation, which is the evaluation deficit. So this is a situation whereby the value amount is lesser than the carrying value. So in this situation, we have the downward evaluation, which is evaluation deficit. So we recognize our evaluation deficit in profit or loss, except when there is a reverse previously recognized evaluation surplus that we have recognized in our other income. If this is the case, then we need to use our evaluation deficit to nil off the evaluation surplus we have before, for us to arrive at the current value of the asset. So these are so for overall evaluation, the evaluation surplus is to be recognized in other comprehensive income, except when it reverses previously recognized evaluation deficit. So we have depreciation. This is the systematic allocation of the reshapable amount of an asset over its useful life. So this is the systematic spreading of the value of a tangible asset over its useful life. So commencement of depreciation commences when the asset is available for use as intended by the management. So the method of depreciation should reflect the pattern of consumption. To reflect the pattern of consumption based on the value and the category of the asset. And it's also based on the company policy that they will use to determine the method they will use to depreciate their asset. I want us to also remember when we are treating IAS 8, company policy, estimate, and error. So there we give an example of company policy, we give example of estimate. So when we are deciding the method of depreciation, that is company policy. When we are talking about the asset useful life, that is estimate. So don't let us mix it up. We can also replace it to IS 8. So we also have cessation of depreciation. That is when we stop depreciating the assets. So depreciation 6 at the early date of when an asset is being recognized or when an asset is being classified in line with IFRS 5. I think we can relate this. But I was saying that all the standards work relatedly to each other. When you talk about the IS2 as a current asset, which are being used as a major as a major classes of assets that is being transacted on the day-to-day activities of the company operations. So we also relate it to IS 16, which is property, plant, and equipment, to IS 40, to IS 5. So if you can see it now, when we are talking about when can we cease depreciation under IS 16, we made mention of when an asset is being classified as IFRS 5, which is an non-current asset held for sales and discontinued operation. The moment you classify a particular asset as IFRS 5, one of the activities, one of the steps that we follow is the cessation of depreciation, followed by representing the asset in a separate line under the current asset, and also categorizing the asset as a current asset as well. So when to cease depreciation is one, when an asset is being recognized, that is when there is no value, when there is no economic benefit on the asset again. And secondly is when an asset is being classified as non-current asset held for sales. So moving on, recognition of depreciation. Generally, depreciation is to be recognized in profit or loss account as an expense. However, under some certain circumstances, it can be characterized as part of cost of another asset. Example is depreciation on assets used for production of goods should be capitalized, because we are incurring that wear and tear as a result of continued usage of that particular asset in the production. That is the reason why the depreciation will be capitalized. So we also have land and building. Let's look at what we have under the land and building. So land is a non-depreciable asset, simply because it's becoming a very difficult activities for us to determine the particular useful life of the land. However, a land can also become a depreciable asset whenever the land is a leasehold land. That means for a leasehold agreement, there will be the maximum the maximum years for the agreement, the maximum years that the agreement will use before it becomes inactive. So if there is a land that is being involved in a leasehold agreement, the land in the book of the lessor, that is the person that leased the land, the person that borrowed the land, their particular land can be depreciated based on the useful life of the lease agreement. If the lease agreement is 5 years, that means that particular land under leasehold agreement can be depreciated. The value can be spread over that 5 years of agreement, because it's expected that after the 5 years, the land will not be under the control of the company. So for the purpose of depreciation, land should be separated from building. Yes. We also have burial plants. So these are the categories of assets that we have. We have burial plant. It's a living plant with the following characteristics. I think we should have looked at these under IS 41. Is that IS 41? Yes, agriculture. It's bear and agricultural produce. It can be used for more than one accounting period. The likelihood of being sold as a scrap is considered to highly remote. So highly remote is not certain, but that does not mean it cannot happen as well. Example include cocoa tree, mango tree, rubber tree, palm tree. All these are what we can call a bearing plant. So IS 16 revised require that bearing plants should be classified as property, plant, and equipment for companies that are into agricultural products. For companies that they operate in the agricultural sector, They can also categorize all these above listed three as property, plants, and equipment. However, the product derived from the tree, let's take for instance a mango tree. If you categorize the tree as a property, plant, and equipment, the moment we extract the mango from the tree, that mango become IS2. While the tree remain IS16, the agricultural product derived from the mango can be categorized as IS2 because it's expected that that will be what the company transacts. If that is what the transact their day-to-day activities. So they will call that IS2. So compositization. So IS16 require that composite or complex asset that is having different useful life should be depreciated on component basis. So what do we mean by compositization or componentization in IS16? Componentization is a situation whereby we have a particular asset that each part of this asset, each segment of this asset have different useful life. Example we have here is aircraft. For aircraft, as you can see, that each part of the aircraft engines is possible that they have different useful life that is even different from the whole value of the aircraft as a whole. So for a situation where we have an asset like this in place, we are going to make use of the computerization principle, which means that each part of the aircraft will be depreciated based on their useful life. But I don't say that, okay, because you have said that, okay, the entire useful life of the plane is 10 years, whereas we have some engines that are expected to work for more than 30 years. So I'm just using that as an example. So it is expected that if there is an engine in the aircraft that can use that such kind of behavior, the general useful life of the whole asset should definitely be more than that. But however, in a situation whereby we have an asset that each part of the asset have their separate useful life, so we are to consider depreciating each asset separately. Subsequent expenditure. It is a common norm that after the initial cost, every other cost incurred on the particular asset are to be expensed. However, there are some costs that when it's being incurred on an asset, we can capitalize it. We can add it back to the value of the asset. What are the scenario? What are the criteria for us to add a particular cost back to the value of the asset? Number one, if the cost we incur on that asset is going to prolong the useful life of the asset, that means we are going to add that cost, or we have the ability, or we are allowed to add the value of such cost back to the value of the asset. We can capitalize that value of repairment, that value of additional cost incurred. So far, the cost or the work being done for us to incur that particular cost is going to increase the useful life of the assets. Then we can capitalize that cost. Another reason is if it enhances the economic performance of the assets. If you carry out a major repair on your plant, a major repair on your motor vehicle, which is going to enhance or improve the performance of that particular motor vehicle, that means the cost incurred to ensure that particular thing is being put in place can be capitalized. So any other costs other than those specified above should be recognized in profit or loss as an expense, because it's expected that any other cost that does not provide these two major criteria should be expense. Repair and maintenance. Because of repair and maintenance should be expense in the profit or loss in the period incurred. However, major repair costs which are not regular should be capitalized, especially if it significantly enhance the performance of the PPE. Still speaking to what we just discussed above. A major repair that is going to improve or increase the lifespan, that is going to improve the performance, that is going to improve the usage, the deliverable of such assets. That particular kind of cost should be capitalized. So major expansion of IS16 required that major expansion of all costs should be capitalized and included in carrying amounts of the PPE. So everything you are speaking to the fact that there are some set of costs that we incur even after purchasing the asset, after incurring the actual cost of the asset, there are some repair costs that they meet up the capitalization threshold. And such kind of a cost will either improve the performance of the asset or increase the useful life. As a matter of fact, there is no how the performance will improve without expecting the useful life to improve as well. So we have some little assignments here: disposal, residual value. This is the scrap value, the actual value we have after removing the depreciation from the cost of the asset. Then the disclosure requirements. What are the disclosure requirements? We have the recognition criteria, the value of the asset, the depreciation policy. All these are part of the disclosure requirements. So we can just make these findings in our free time. So I'm going to allow us to unmute now in case you have any other question. Because I'm surprised when you say that we have not reached IAS 40, but no problem. If you can't read it today, we have the recorded class already. So I will share the recorded class with us. So we are going to watch it. I have the material which I will also forward to the class. But let me allow us to unmute and see if you have any question. Please, let's raise our hand. Let's raise our hand. Let's raise our hands. Do you have any question, please? Do you have any question, please? So I guess, okay. So, Mr. Azan, please.
Good evening, sir.
Mr. Azan, country.
Good evening, sir.
Hello, sir.
Good evening.
Yes, sir. Thank you
Sir,
for the
please, I have
class.
a question.
Sir, please, you need to be audible. I can't hear you.
I said,
Hello?
good evening, sir.
Yeah, good evening,
Okay.
sir.
Yes, I said, thank you for the lecture. May God continue to increase in knowledge and understanding. My
You are
question is
welcome, sir.
this. Yeah, for the repair and maintenance and then the capitalized aspect. You know,
Yeah.
let's say for instance now, we have generator. So when we do some little repair, like repair that cost like 2,000, 5,000, on the generators that are worth like 500,000. So that's repair and maintenance. We have to
Sorry,
expense that one.
can you come again on that? Hello,
I
sir.
said when we, okay, I'm trying to come again. I said
Oh,
when
yeah,
we have
come again.
a, a generator that is worth 500,000.
Okay.
So we make some little repair and maintenance, which is worth like 10,000,
Repair
five
at how
thousand, or
much?
like,
5,000.
yeah, yes, sir. So
Okay.
we are supposed to express that on our profit and loss account.
Yes.
So
Yes.
why doing that? You know, when the tax officials comes around and then they want to tax it, they will have to remove that.
They will remove it. They want you to just say it now. So you say you bought a generator of 500,000 and you carry
Yes,
on a repair of 5,000.
yes.
So
So how do we benefit that for tax purpose? You know, we can't capitalize it too.
you can't capitalize it. And the reason you can't
But
capitalize
the
it, there is a reason why you can't capitalize it. The reason you can't capitalize it is because the repair of that 5,000, number one, does not increase the useful life of the asset. I will give you an example. If you buy a generator of 500,000, you carry on a repair of 5,000. I'm looking at that repair of 5,000 to be maybe you buy a plug, or if it's not a plug, maybe the engineer actually repairs something that is very, very minor. You just say the value of the generator is 5,000 and you carry on a repair of 500,000 and you carry on a repair of 5,000. So that 5,000, number one, we only enhance that performance for a short period of time. It's not something that we bring on a additional useful life to their asset. Let me give you an instance. Just like you purchase your generator with 500,000. Let's assume you are carrying on a repair of 200,000. Let's say, for instance, maybe you buy a new engine or a new block to the generator. You know, that new engine that you purchase is expected that even if the generator useful life before you buy that particular engine is 10 years, that new engine is expected to increase that from 10 years maybe to 12 or 13 years, because that new engine is expected to perform extremely more like you buying a new generator. So you can see the difference between you carrying on a repair of 5,000 on a 500,000 watts of an asset, and you carrying on a repair of 200,000 on a 500,000 watts of an asset. The impact of that repair, on the asset will determine maybe you can capitalize it or you are going to expense it. So there's no how you are going to benefit from 5,000 repair on the 500,000 worth of an asset. Definitely you are going to expense it. But when you incur a substantial cost, or even without your 5,000, if you can defend yourself that, okay, this 5,000 repair we carry on is going to improve or increase the useful life of the asset, or is going to improve the performance of the asset for a long period of time, then you can capitalize it, which I believe a 5,000 repair will not do these 2 points. Did I answer your question, sir?
Yes, sir. Thank you very much, sir.
All right, sir. You're welcome, sir.
Good evening, sir.
Good evening.
So I have a question, please.
Okay.
I say, should companies colonize provision for future environmental cleanup costs when there is only a moral obligation but no legal requirement?
When there is only what?
When there is
A
only a
moral
moral
obligation.
obligation but no legal requirement.
So if that is not part of the agreement, the company have when they are taking over that particular place, it's not part of the agreement, but is as a result of moral obligation, just like you said. And now that we even have an accounting standard that talk about the environmental reporting. Are you with me?
Okay.
There's
Yes.
there's a standard that talk about the environmental reporting now, which put the healthy and the economic benefits of those in our surrounding to be prioritized. Avoidance of environmental pollution. So definitely you can make a provision for that.
Okay. Okay. Sir. In a period of rising prices, uncle.
In a period of rising crisis, are you talking about making provision in a period of rising crisis?
Yes. Yes, sir.
So how will you know that there is a period of rising crisis as at when you are preparing your account? You are preparing your account today. Now, how will you know that tomorrow there will be rising crisis? So those are the factors that we need to consider. If you are going to do anything in accounting, there is a principle that guides it. And one of the major principles is that the motive behind that thing that you want to do should not be for your own personal gain alone. To be able to consider the effect of that action on the general public or the major stakeholders.
Okay.
I don't know if
But
you get my point.
sir, do you think historical cost accounting still provides more reliable and decision useful information for Nigerian entities?
Did I think historical cost of accounting?
Yes.
Uh, that is another argument entirely. Historical cost of accounting against which cost of accounting? Hello? Hello? Hello, sir. Hello, sir. Can you hear me? Can you confirm if you can hear me in the class, please? Okay, Mr.
Yes, we can hear
Abraham.
you.
All right, sir. Mr. Abraham, I don't know if you are still there. Okay, let's wait. Maybe he's going to come back. So, Mr. Olowo Lile Samuel.
Hello, sir. Good evening, sir. Yes, I
Good
really
evening.
actually appreciate your effort, sir. Yes, sir. Sorry, I want to ask about painting. Painting of the building. Can we capitalize it?
Sorry, your voice
Wait,
is breaking
if
somehow.
okay, the painting of the entire building, can it be
Yeah.
capitalized since it enhance the beauty of the building?
So now we are talking about the beauty now. If is the painting going to increase the value of that building? Is it going to increase the useful life of the building?
I think so, sir.
So those are the things we need to consider. If the painting will not increase or increase the useful life of the building, and it will not improve the performance efficiency of the building, then we cannot capitalize the painting. Only in a situation if you can prove that that painting is going to increase the useful life of the building from 10 to 12 or from 12 to 15 due to painting, then you can capitalize it. Or if you can say that okay, the performance of this building is going to increase when we paint it, that is when you can capitalize it, which I'm very sure painting cannot do either of this. Have I answered your question, sir?
Yes, sir. Yes, sir.
Good. Do you have any other question?
Hello, sir. Hello.
Yes, I'm with you.
Sir, can you hear me, sir?
You're welcome. Yes, I can hear you.
I said, sir, when a company changes its depreciation method from straight line to reducing balance. Are you with
When
me,
the
sir?
what?
When a
Yes,
company
I'm with
changes
you.
its depreciation method from straight line to reducing balance,
Uh,
IAS 8 classify it as a change in accounting estimate, not policy.
oh, no.
Do you
Change of
agree that this
line method to
statement
reducing
truly reflects
balancing
the
method.
substance?
Huh?
Okay, sir, you were saying something.
What do you say?
You were saying something, sir.
Yeah, you said straight line to reduce balancing method. Yeah,
Yes,
I have to get the question right. He says the company changed from straight line method to reducing balancing method. Is a change in what?
network.
No, I can hear you. Can you hear me?
Hello? Can you hear me, sir?
Yes, yes. Yes, I can hear you. Is it my own network or your own, sir? Can you confirm if you can hear me in the class, please? Can you hear me in the class? Okay. So, Mr. I take the network you from you. What you say, straight line method to reducing balancing method. I believe that is changing in accounting, is changing in policy, not changing in estimating. So that is changing policy. Mr. Brahman, I can't hear you. I can see maybe you are talking. You can actually type your question in the chat box. You can type your question in the chat box. So do you have any other question? Do you have any other question, please? So I believe the standard is very clear. Can we still look at IAS 40? So basically, there is a little difference between IAS 16 and IAS 40. So what we have in IAS 40 is land or building, or both land and building that is being held for rental income or capital appreciation or both. both rental income and capital appreciation. So that is what we have in IAS 40. That is the meaning of IAS 40. These are the land or building, or both land or building that is being held for rental purpose or capital appreciation. This means that the investment property generates cash flow largely independently of the other assets held by the entity. It must be owned by the reporting entity or leased to the reporting entity as right of use asset. So property is the land of building, both land of building controlled by the reporting entity. So that we're talking about owner occupied property here. This property held by the owner or by the lessee under finance lease for use in the production or supply of goods or services for administrative purpose. When an owner occupies a particular property, that particular property is not IAS 40 again. If you can look at it from the meaning, a production or supply of goods or services for administrative purpose. So that is what they use that particular asset for. If an asset is being used for this reason, then the asset cannot be categorized as investment property. Carrying amount is the amount at which an asset is recognized as the measure of financial position. The cost is the amount of cash or cash equivalent paid, or the fair value of other consideration given to acquire an asset at time of its acquisition or construction. Example of investment property: you have land acquired for undetermined purpose. Land acquired for undetermined purpose. If you acquire a particular land without any reason, it is expected that for that basic period that you are here to determine the reason why you own that land is being there for capital appreciation. Definitely, you can call it an investment property. Land acquired for long-term capital appreciation. Now you have a specific reason the capital appreciation. The first one is indirect capital appreciation. Without any specific reason for you to somewhere. For that period of time, the value of that land is expected to continue to increase. Number three, we have property that is currently vacant. However, the intention of the owner is to lease the property under an operating lease, more like a rent. Property acquired under finance lease, which is to be leased out under operating lease. You lease it under finance lease, that you have the intention of subleasing it again. What are the examples that are not investment property? Property held for administrative purpose is in line with IAS 16. Property used in production or in course of rendering service is in line with IAS 16. Property held for sales in ordinary course of business. Take note, when you sell the property, which is not what the company are into in the day-to-day transaction, that is not IAS 2. That is sales of assets. A particular company that is into production of, let's say, for example, production of agricultural products, now sold one of their warehouse. That is not IAS 2. It's not inventory. That is sales of assets. That is sales of assets. So they can recognize that their warehouse before being sold is under IAS 16 because it's being used for administrative purposes. So that is sales of assets. So for a company that is into real estate business, they now sold one of their building at Lekki, so that is IAS 2. It's not investment property and it's not IAS 16. It's IAS 2. That is what they do. That is what they transact in their normal day-to-day business activities. Do you have any hand raised up? Yes, we have access to all the material, both the IAS 40 and IAS 16. You have access to it. It's not being recorded, but you can watch it on the YouTube page. That's why I say you subscribe to the YouTube page. Once you subscribe to it, you can watch it later on it. So let's continue. So these are the examples of the property that are not investment properties. Land qualifies as investment property if held for long-term capital appreciation or for current undetermined future use. Property held or being constructed for sales, not an investment property. These are what we should know based on our discussion. So owner-occupied property. So owner-occupied property is not an investment property, definitely. This will include property that is going to be owner-occupied in future. property occupied by employee, whether or not the parent at a market rate. So you can't say it's an investment property when your employee are the one staying in it, that they are the one occupied that particular building. Is not an investment property. Property occupied by a group member qualifies as an investment property in the individual financial statement, but not in the group statement, because intergroup transactions are meant to be eliminated. Property interest. What do we mean by property interest? Property held by lease, other operating lease, and the lease has right to sublet the property to other parties, and the party in capital and participate in capital appreciation in value of such property. This property with such right is called property interest. The standard provides an option for such kind of property interest can be recognized as an investment property, because the lease agreements have give the lender, the borrower, have give the borrower the authority to sublease the asset. The moment the borrower can sublease the asset to another party, then they are entitled to capital appreciation on it. So the standard provides an option for such kind of asset, such kind of property interest can be recognized as an investment property in the financial statement of lease under fair value model. This classification option is applicable upon each property interest on property by property basis. If this classification option is opted for one such property interest, all other investment property have to be accounted for under fair value model, and such classification options should be included in the disclosure. So investment property in a consolidated financial statement. I think this note I'm using for you presently is for SBR, but it's still the same thing. I also have the one for the class. Let me quickly check that. Yes, this is one for the class. Unoccupied property. You still look more like the same thing. Sorry, I want to look at. Do you have any question? If you have any question, you can probably ask. While I was looking for the material, you have the floor open. You can unmute your mic. If you have question, please. If you have question, please. Let's move to our mic. Someone just unmute his or her mic now. Question.
Okay, sir. Good evening, sir.
Good evening.
Please, I want to understand the difference between this IS 40 that we are doing and IFRS 16, because they are related. IFRS 16, that is leasing, I think so.
Lease. Okay.
Yes, sir. Well, they are looking similar to me. So, what are their main differences?
So there are major differences. Like you say IS 40 and IFRS 16, right?
Yes, sir.
So the major difference that IS 40 is an owner property that is being held for capital appreciation or for rental purpose. So we are talking about IFRS 16. IFRS 16 can either lead to IS 16 in form of right of use asset that is being used for administrative purpose. When you lease a particular asset from someone and you are using that asset for administrative purpose, is IFRS 16, you are going to recognize the value of the right of use asset that you pay. The value of that, you are going to calculate the value of that right of use asset, which is going to be inclusive of the initial lease agreement and some other costs attributed to it. So you are going to calculate that value and recognize it under your PPE if you use that lease asset for administrative purpose. Did you get that? However, you can also lease an asset and still sublease it to someone else, which is an example of what I've said now. If you lease an asset from me and I give you the right that, okay, Mr. Solomon, you can sublease this asset to another person. Now, you lease the asset from me, that is, you are under IFRS 16. You now sublease the asset to Madam Abidemi. So, in that situation, in your own book, you have two things to recognize. You lease the asset from me. The second thing is that you sublease it to someone else. That sublease that you did to someone else, to you is now becoming an investment property to you. So if you are using IFRS 16 from your own end can either be IAS 16 or IAS 40, depending on what you are using it for. But we are talking about IAS 40. IAS 40 majorly is an asset that is being used for capital appreciation or rental purpose. I don't know if I
Yes. Very well, sir. Very well. Thank you so much.
All right. So you can still make more findings on it, sir. So
It's okay, sir. All right. It's all right, sir.
All right. Thank you very much, sir. So this is the note for the class. Still the same thing with what I've been explaining. Unoccupied property interest, you see, you have the auxiliary service. Investment property should not include auxiliary service, meals, cleaning, security, utility, and maintenance. If in the case of a certain property, an entity provides auxiliary service to the occupant property, the entity shall apply the following. The property will be investment property if quantum of the service is immaterial or insignificant. For example, security or maintenance. The property will not be investment property if the quantum of the service is material or significant. For example, owner managed hotel. Therefore, such property will be covered in IAS 16. What are they saying when they are talking about auxiliary service? I own a property myself. I want to categorize it as IAS 40. Property held for capital appreciation or rental purpose. Now, for those that are renting through, I'm now the one providing some services to them. The moment I'm the one providing some services, and the services I'm providing to them become a material services, like an hotel now. You know, in an hotel, you come into the hotel, you rent the room. So, you know, that room that you rent from me, psychologically, I will tell you that it's an investment property. It's being held for rental purpose. However, the reason why an hotel cannot be an investment property is because I'm providing a material service to you using that particular room. I'm the one that will provide your food, your drinks, everything that you need in that apartment. There are some hotels that you can't bring anything into the hotel. You need to buy from them, or you go outside, buy something and eat it outside. So in such kind of a scenario, the service that is being provided by the hotel management has prevent them from classifying that particular property as an investment property, but rather it will now become IAS 16, a property held for administrative purpose. So what you are providing to them will now becoming what you did on your day-to-day activities. So for you to now say that this is an investment property, you must not provide a substantial service to those that you rent that particular apartment to. So just like we have the example here that just maybe you are providing a security service to them. So providing a security service to them alone means that they can do anything they want with that apartment. They're just providing a security service for them, probably for security's sake. So that does not prevent you from categorizing that particular asset as an investment property. But the moment you are providing a substantial service to them, like that of hotel, that particular place will become IAS 16 and not IAS 40. So I hope I'm not too fast. I'm just trying to be considerate of the timing. So we have investment property in consolidated financial statement, which is leased to the parent company by a subsidiary company or vice versa, will not be treated as an investment property in the consolidated financial statement. Instead, it will be treated as an owner-occupied property under IAS 16 because the property is under owner-occupied use from the good perspective. However, the property will remain investment property in the individual financial statement. So all these are just English. That's something we can definitely understand. Property with dual purpose. What do you mean property with dual purpose? Property with dual purpose, these are a property that a single property where some part is being used for investment property and some part is being used for administrative activities. Let's take for instance, UBA building that we have at CMS. There's a major building there at their head office. If you check the billboard outside there, you can see that they are not the only one in that building. We have some other companies there that are using that particular building as well. So in that situation, UBA recognizing that whole property now can be IAS 16 and can also be IAS 40. In what situation can it be IAS 15 or IAS 40? If accounts can separately, if they can separately provide clarity to the portion that is being held for administrative purpose against the one that is being held for rental income, then they are good to go. They can recognize the portion that is being IAS 16 and the other one that is being IAS 40. But in a situation whereby the one that is being held for administrative purpose take over the substantial part of the whole building, it take over the substantial part up to the stage whereby they can't even separate the one that is being used for investment property again, that is being used for rental income again, then the whole building will be recognized as IAS 16. Let me take it again. Whole building owned by an organization. Four building storage. Two buildings is being used by the organization for the administrative purpose. Two buildings has been rented out to a third party for rental income. The organization, so that they can build this separately, they can do the building in the market. That they do separately. As a rental income, the authority to recognize both IAS and IAS 40. However, the situation only two or on that floor that is being rent out to other parties, then it means that the ability to tell us that they can that or
Your network is not good, though.
from can you, sir?
We can't hear you very well, sir.
You can't hear
It is cracking, sir.
about
It's breaking, sir. The network is not good.
hello.
Yeah, hi, sir. Hi, sir. I think it's coming up, sir.
It's coming up.
All your explanation,
Okay.
we could not hear you, sir.
You could not hear me.
Yes, sir.
Okay.
That's your recent
I believe
explanation.
yes. I believe could have been captured. Okay, we only hear from
Your
four
network
building
is
story building.
breaking.
It's
Yes.
still breaking, though.
Is it fine now?
It's not fine. It's not fine.
Okay, I'm trying to connect to another network. Trying to connect to another network. Can you confirm if you can hear me better now?
We can hear you, but
Yeah,
start the
yeah,
explanation
yeah.
again. Let's see.
Hope is fine now.
It's
It's fine
better,
now.
but start the explanation.
Okay.
Yes, sir.
Where did you lose the connection with me under this
Every
IS40?
explanation, sir.
Every explanation, okay.
From the beginning, sir.
At least, yes.
You were
We
From
could
the
talking
not hear
beginning.
about
you,
a
sir.
building.
Eh?
Especially when you
From
are
the
talking about building and CMS.
four-story building, from the building
Building
UBA
from
building, sir.
CMS.
That's
Okay, no
CMS
problem.
building.
No problem. No problem. So I'm talking about IS40 investment property as a property that is being held for rental purpose or capital appreciation, which is the major reason that differentiates it from IS16, which is the property that is being held for administrative purpose. So I move ahead to explain some examples that can categorize as an investment property. I give us an example of a land held for long-term capital appreciation, a land held for current or undetermined future use. When you buy a land and there's no reason, you don't have any intention of using it for anything at the moment, it can be your investment property, because at that moment, it's expected that the value of the land will continue to appreciate. So it's still the same thing like you buying it for capital appreciation purpose. So I also give you an example of some property that cannot be categorized as an investment property, and a property intended for sales in an ordinary course of business. I gave you an example of a real estate business. So what if for a real estate company or a developer or a construction company that shows that what they do on day-to-day activities is building of houses and selling it. That is what they do on their own day-to-day activities. So we cannot say that because we talk about land or building, that particular building is an investment property. No, it becomes IS2 inventory to them because that is what they do in their day-to-day activities. It's not an investment property. So the motive of building that particular building is for them to sell it out to their customer. So that is what they do. So that categorization of building is not an investment property. So I have them under here. So we also have land qualifies as an investment property if held for a long time and if currently undetermined, just like the same thing we explained at the top there. So I was explaining the meaning of property interest. So property interest is a property held by leasee under operating lease, and the leasee has right to sublet the property to other parties. So far the leasee have the right to sublet the property to other parties. So that particular kind of lease, the leasee, the borrower that borrow from the major owner, the first-hand owner, in his own book, he can recognize that particular property that he leased, the property that is being leased from Mr. A to Mr. B. Mr. B now leases it out to Mr. C. So for capital appreciation and for rental income, Mr. B, who leases it out to Mr. C, can recognize in his own book an investment property because he's also leasing it out to Mr. C and is expected to have a rental income based on the agreement. So in that scenario, that is what we have. That is what we're trying to talk about when you say property interest. So I explained auxiliary service. Auxiliary service is a situation whereby investment property should not include auxiliary service. Give an example of auxiliary service like meal, cleaning, security, utility, and maintenance service. If in case of a certain property, an entity provides auxiliary service to the occupant of the property, the entity shall apply the following. The property will be investment property if quantum of the service is immaterial or insignificant. For example, security. This property will not be investment property if quantum of the service is material. A clear example of this is an hotel. We have given the definition of IS 40 to be property, land or building, or land and building that is needed for capital appreciation. An hotel is also a building. and the owner can claim that it's being held for property acquisition. But the reason why an hotel cannot be an investment property is because that auxiliary service that we are talking about here is what they do majorly: meal, cleaning, security, utility, maintenance service. Everything is being done by the hotel owner to their guests. Because that service is being done by the hotel owner to the guests, that means the hotel owner cannot recognize that particular building again as an investment property, because the service that they perform, that they render to their customer, is now become a substantial service. However, in a situation whereby a particular room is being rent out to a customer and there is nothing like meal, cleaning, or utility service, maybe what the owner of the building is doing is security. In that scenario, that particular building can be categorized as an investment property, because what the service being performed, the services being rendered by the owner of the building to the customer is not categorized to be a significant service. I don't know if you get my explanation on that auxiliary service. Can you confirm if you can still hear me? Hope I'm not the one. I'm not talking to myself again.
Yes, we can
Yes?
hear you. We can hear you.
All right. Thank you very much. Thank you very much. I'm just trying to be fast because the time is not on our side. So after that, we are talking about investment property in consolidated financial statement. That investment property in consolidated financial statement, a property that is being owned by the parent company but is occupied by the subsidiary, or owned by the subsidiary occupied by the parent. In their group financial statement, they are not going to recognize it as an investment property, but rather we are going to recognize it as an IAS 16 property, plant and equipment held for administrative purpose. However, in the owner separate book, they can carry it as an investment property. So that is what we explain on that. So property with dual purpose, which is where I'm using UBA building as an example. Let me make it very simple so that I won't complicate the whole scenario. A single property, 4 building story. Each story have 8 rooms in there. The owner of the building is using 1st story and 2nd story, everything, while they rent out the 3rd and 4th story building. Now, so far the owner can determine the value of each story building separately, confidently, and accurately, in line with the evaluation standard, the fair value standard. IFRS started that, okay, this is the value of 1st story building, this is the value of the 2nd story building. Each story building have their own value separately, independently from each other. If that is the case, in the book of the owner, they can recognize 1st story building as IAS 16, the last 3 and 4 story building as IAS 40, because the value can be determined separately. However, in a situation whereby the owner of the property, they are the one using from 1st story building to the 4th story building, they now lent out only 2 rooms or a room from the 4th story. In this scenario, it will become practically impossible for them to tell us that they can give value to that single room alone without compromising the value. There's no how they will not compromise. They are the one using almost everything. In that scenario, the whole building will be categorized under IAS 16 as a building held for administrative purpose. However, if it's other way around, what did I mean by other way around? Other way around is in the sense that the company lease out or rent out from the 4th story building to the 4th one, and they are only making use of a single room there as their office. The whole building become investment property, because whatsoever take the larger portion of the whole building, that make it impossible to value the remaining unsubstantial portion that is being used for other activities. That portion that take over the major one will become what we can use to recognize everything in that building. I don't know if my explanation is not complicated. I'm just trying to find the simplest way to recognize it, just to let you know that a single building that is being used for dual purpose, rental, prison, and also administrative purpose. If it's possible for us to determine the one that is being used for rental and the one that is being used for administrative purpose, very good, no problem. We go ahead, we recognize the value separately. However, if it's now be impossible, it's not possible for us to recognize that this is one that we are using in IAS 16, this is one we are using in IAS 40. What we are going to do in that scenario, we are going to look at which one take over the major part of the building. Is it IAS 40, that is it rental income that take over the major part, or is it IAS 16? Is it the owner occupied space that take over the major part? Whichever that take the major part will be what we are going to use to recognize the whole asset. That is just a simple part to recognize. Did you understand this?
Yes, yes.
Thank you very much.
I have a
So
question on
recognition.
that, sir.
All right, no problem. Come on. You can go ahead.
If the four-story building that you use as an example,
Yeah.
if the company is using one story and rented out 3 other parts,
Okay.
so majorly like that, we can categorize it as investment property, right?
Okay. We can categorize this and we cannot categorize this. Let me explain. A four-story
I
building.
want to give another scenario.
Yes,
on
yes.
That
We are going to stay under that scenario. Four-story building. The company rent out 3 and they are using one-story building. Is that not your
Yes.
question?
Yes, sir.
God bless you. In that scenario, the first thing is that can we determine the value of each story building separately? Yes or no?
Okay, we can't separate the cost.
We can't value each story
We can't
building, right?
determine. Yes.
We can't determine
Yes,
it.
sir. We can't.
God bless you.
Yes.
If we can't determine it, that means that rental income that is being used for the major part, which is 3 out of 4, everything will become a rental income asset. However, if we can determine it, we are going to determine that portion that is being held for administrative purpose in line with IAS 16 and the remaining 3 buildings in line with IAS 40. But if we can't determine it, just like you said, then the whole building will become IAS 40 because that is what take over the major parts of the building. Did you get my explanation,
Okay.
sir?
Yes, sir. So now we are standing on the last one that you explained. Now we can't determine each story building.
Yes.
But
If we can't determine each story building,
they are still the one. Yes, we can't determine it, but they are still the one supplying all the whole building with lights, and when they on running cost of generator, when they on generator, they are still the one supplying everyone. Can we
so
still classify it as?
now you are bringing in another aspect. Now there are another
Yeah,
aspect is
because
now we are talking about
you
them
explained
providing services to them now.
yes, sir.
Hello, sir. Can we look at it in the area of PM that taught us about allocation of there is a way we can still allocate with the way this my brother is talking about. You know, we can still allocate the cost of all the things that the man is using in the one story, and the rest 3 can be apportioned to IS 40. Why that of
Yes.
the
So the scenario around there now is now 2 different scenarios. Scenario one is that there's a 4 building story and the owner of rent out 3/4 and they are using 1. And now ask that one that they are using, is it possible for us to determine the value of that one separately from the whole building? If we can determine the value of that one separately from the whole building, then we are going to recognize that portion in line with IAS 16 and the remaining portion in line with IAS 40. However, if it's not possible for us to determine the value of that section that is being used by the owner, if it's become impracticable or impossible for us to determine that particular section that is being used by them, then the whole building will be recognized in line with IAS 40. Because it means that the portion that they are using is not substantial, it's not material. There's no materiality being attached to that portion that they are using. So that means the major part of that building, more like 95% of that building is being used for IAS 40. Then we are going to recognize the whole building in line with IAS 40. Now, the second part of the question is now, we are talking about them providing service to that building. You are talking about electricity. Now, electricity, if electricity is what the owner of that building are doing by themselves, no, electricity can be as a result of them be a remittance agent or intermediary between the power holding and the customer. Or if what they are doing majorly is that they are into that electricity business, if they are the one into that electricity business, that means we are now going to consider the substantiality of that service that they are performing to the customer. In the time, maybe we are going to recognize that particular building in line with IAS 16 or in line with IAS 40. And I give you an example of an hotel. You know, hotel too, they are the owner of the building. And what their customers do is that they come in and rent the building for a short period of time. You get. But for the fact that once those customers comes in, they are the one providing every service that they need to them. Every service that they need, they are the one providing. So even there are some hotels that they will not allow you to buy common table water outside. You need to buy it from them. In that scenario, hotel cannot be recognized as an investment property. It's becoming a property, plant, and equipment held for administrative purpose. Now, let me go back to your example, Mr. Lakuli. If your building owner providing that electricity service, if the electricity service is the only thing that they do to that company, to the users, and they are more like a remittance agent to the actual electricity provider, then that building still remain IAS 40. But if they are into electricity business, what did I mean by they are into electricity business? They buy units from PHCN and they resell it out to the final consumer. You know, we have companies that are doing that presently now. Now, what they do is that they will bargain with the private electric provider, power supply. Now, don't worry. This particular estate will take up the contract. Provide us the electric unit. We buy it from you, then we do the markup and sold it out to this estate. In that scenario, if that is what they do, so if that is what the building owner they are into, then we need to consider the relevancy of that service on the user of the building. If that is the only thing that they are doing to the user, then we can still say that okay, it's under IAS 40. But if they have take over every service that those people in that building needed, starting from electricity, utility, maintenance, so that means that building is no more an investment property, it's now IAS 16. There are two ways that building can become IAS 16. It's either they are the one providing a substantial service to them. A substantial service is in the sense that a major service needed by those occupying that building. They are the one providing everything to them. Then it's an IAS 16. Secondly, is if the major part of the full building is being held by the owner, is being used for administrative purpose, up to the stage that the portion that is being used for investment property cannot be determined. We can't determine the value of that portion. Then the whole building will become an IAS 16 asset. The same thing happened if the whole building, more like 98% of the building is being used as an investment income, and the remaining 2% that is being used for administrative purpose, we cannot determine the value for that 2%. The whole building will be IAS 40. I don't know if that answers your question, sir.
Very clear, sir. Thank you, sir.
All right. So let's quickly round up it. So we have the measurements of IS40 and the initial measurements can be fair value or cost model. So just like we have it in IS16, they are almost the same thing. So the subsequent measurement now is where they differ. We have the fair value model and we have the revaluation. Okay, we have the fair value model and the cost model. So there are some little difference in fair value model in subsequent measurement here and the one we have under evaluation in line with IS16. So let's look at it. After initial recognition, an entity that chooses the fair value model should measure all of the investment property at fair value, except in an extremely rare cases when it cannot be measured reliably. In such cases, it will be applied the IS16 cost model. Again, all laws arising from change in fair value of an investment property should be recognized in net profit or loss for the period it arises. So the timing of fair value, all these are just a written stuff that we can just go through. I don't want to waste our time. Everything we have here are just more like an English, pure English. You see this question here. So it's a past question. It's a very good question for practice. I have the solution. So today I will start going through it now. It's going to be somehow technical for us that people are using to press the class already. So I'm going to send this to the class, and I want us to go through it, understand it, and digest it and try to solve it. And I will also, should I send the solution? Or I should wait for us to solve it before I send the solution. Huh?
Send the solution, sir.
Please, if I send the solution, please, you need to go through it, sir, so that we can understand it. No problem. If you want me to send the solution, I will send the solution along with it. But please, let's go through it. Let's ask any question if there is anything we can't understand. So I'm going to send the two soft copy, IS16 and IS40, the solution to the question we have under IS40, and I will also send the recorded IS40 class separately, so that we can go through that separately as well. I think that should also help us, right?
Okay, sir.
So, do you also want it as well?
So, can we solve it together and be in the next class?
If we solve it together, now this is 15 minutes to 11. I will just end up talking. But believe me, once you read the question and you see the solution, it's very straightforward. It's just English. So the English there is that they will tell you some of the criteria why an asset cannot be an investment property. You will see it there that is being held for administrative purpose. It's been this, it's been that. And they will tell you some of the criteria why an asset should remain an investment property. So they will ask you to advise the management. I have it in the solution. It's very straightforward. This is the solution here. And you can see from the solution aspect, we try to explain the reason why a property should be an investment property. Given the fact that the top 3 floor can be sold in a separate transaction, Epsilon is required to recognize both PPE and investment property. This is an example of the question that Mr. Olafleton is asking now. Olakule is asking. If you look at the solution here, it said clearly in that question, they told us clearly that Epsilon can be out of 4 buildings. Epsilon is just one, but they let us realize that the 3 buildings can be separate from that one building that the Epsilon is using, and we can determine the value separately. They told us clearly. So because they told us clearly, it's now very easy for us to tell them that so far we can determine the value separately. Then we can recognize both PP and investment income. You do understand what I'm saying?
You don't count ABC. You read.
Please, please mute your mic, please.
Did you understand my explanation?
Yes. Mr. Mosu,
Zero one is number.
I'll be mute. We'll get you, sir.
Okay. So once you go to the question, you will get it. You will understand. In fact, I'm going to provide more clarity to the question that Mr. Lakule asked. So you will get it clearly. And it's a past question. It's a past question. It's a past question. It's a past question. Please, let's try and solve it. And also, check through it in our solution. Please, I'm going to send everything to us immediately after this class. Do you still have any other question? So in the case of no question, for those of us watching us from YouTube, if you want the question as well, you can reach out to us on WhatsApp. So we are going to send the question and the material to you. You can reach out to us via our WhatsApp line 08136699070. So I will gladly send the material to you freely. So I'm going to send the material to class immediately after this class. So in the absence of no question, I think we can call it a day tonight. Also,
So what about the note that you opened just now?
Yes, I will send it. That is the solution.
All right,
to that question. I will send it. So this will be the last class for this diet. As far as accounting standard is concerned, I think we have covered a lot that I believe by the grace of Almighty Allah, we shall all pass and we shall have no reason to come back to this class again. If we are meeting again, it's going to be corporate reporting SBR class, inshallah, by God's grace. So let us take our time to read through our previous classes, including those one that my colleagues have been taking us a group account, cash flow. You get. So just make sure you cover what you can, and let's put our best, very possible best. I understand that okay, do you have a question?
No, I don't have a question, sir. I understood today's class. Well, some of us joined late. Some of us joined the group chat late. Since this is your own last class, is it possible that you tell us all your materials that you took with them?
Okay, no problem. So this is what we are going to do. For those of us that joined the class late, thank God we are the group already. So I'm going to send the link to all my previous classes, everything, including the recorded classes. I'm going to send the link of everything, and I will try as much as possible to resend all the material again.
Thank you very much,
all
sir.
the material again. But please, before you ask question on any material, try and watch the video.
Yes, sir. No problem. No problem, sir. Thank you.
Now watch it and you don't understand, then you can come back and ask questions. I will try as much as possible. I got tomorrow morning. I will send all the links to the classes and the materials. I will send everything.
No problem. I'll remind you, sir. Thank you, sir.
No problem. I'm going to send these materials to us now. IAS 40, IAS 16, and the 2 questions solutions. And also, I have IAS 12 income tax, and also I have IAS 9 financial instruments, and lastly, I have IAS 15 revenue from contract with customer. Everything I'm saying now, they are testable standard. So these 3 that I mentioned now, I will send the link to the class. We have it recorded already. So like 1 hour class, I will send the link to you. I will send the material to you. I will send the questions solved to you. I will send the solution too. Please, for God's sake, let's watch the recorded class. Please, let's watch the recorded class. Please. So that when we watch it and go through the solution, it's going to provide more clarity to us. Please. Yes. And let's try and subscribe to this YouTube page too, so that it can help us to grow our page as well. So I'm going to send everything to us now. So thank you very much for your time. Thank you very much for the diet. So if there's going to be a revision class, I think it should be communicated to us. And if likely, I may also be part of those that will take the revision. And if not, we'll meet my colleagues who will definitely provide the information to everything they handle. So let's try our possible best. I know it's not easy, very stressful. Imagine going to work tomorrow, coming back to being in class till 11 p.m. Yeah, it's very stressful. But believe me, the satisfaction, the the encouragement at the end of the day, the worth of the certificate, the grace on it, at the end of the day, we are going to realize that it's worth every sacrifice that we have made now. We realize that yes, it's worth it. By the time you have your ACA and you have a better place of work that they are paying you so well, all these stressful activities, will become an history. So I pray that this very last diet is going to be the last. You are going to write this FR and you will pass it. Not that anything bad will happen.
Amen.
By the special grace of God. So thank you very much for this diet. Thank you for the cooperation. Thank you for the time. Thank you for the data. Thank you for every resources you have put into this. Thank you very much. We really appreciate you. So see you all at the top. Thank you.
Thank you, sir. God bless you, sir.